Good morning, folks, and welcome to the pre-market insight for January 28, 2020. Gap down rules in play. Let's go. So we're taking a look at the ES, S&P 500, and currently we have a fairly bit of a strong gap up in terms of the percentage points. We're currently up 0.54% or 17 points from where we closed yesterday. However, this needs to be taken into context. If you look at where we're actually still very much within the range of yesterday's price action. And so until we get above yesterday's high, which is 32.69, another 13 points away, really this gap up is much ado about nothing. Because we had this large gap down yesterday, gap rules are in play, and so we have to be looking at the low of yesterday, which was 32.33, and the high of yesterday, which was 32.70 approximately. We want to see price approach, test, and react to those two levels to give us a signal as to what the market wants to do from here on in. Now, in the wider context, we are in a bullish market and have been for quite some time, undeniably so. And so for now, the benefit has to go to the bulls in terms of where your bias may lean. However, there's no need to be the first man on the firing line in terms of your trading entries. What you want to do is observe how price develops intraday, specifically when we've had these sorts of fairly wide range gap downs, almost 100 points down from uh, the high that we established last Wednesday. Then you want to be able to see price begin to, in some sense, cool off for a second, take a pause, and engage both buyers and sellers, form some sort of balance, and then begin moving towards testing one side of the range or the other. All right, so keeping it simple, smarty. What are we looking for today? If we do get above 32.69, then the next point of reference that we're looking at is the low that we set on Friday, which is 32.80. So another 10 or so points to the upside above 32.70. However, if we break yesterday's low of 32.33, then because on the wider time frame we're actually in the middle of a range, as you can see here, we're really in no man's land. We're actually in the middle. From this low to this high, we're actually in the middle. So there's no real substantial, significant edge in terms of trading here in the middle. If you want to increase your chances of having a greater positive expectation over the course of your trading career, then definitely you want to be trading at the extremes, at the highs, and at the lows. Given that we're in the middle of the range, there's not much edge to be had here on intermediate term basis. However, again, using yesterday's low, if we do break that, we can very likely see all the way back down to 32.06 or thereabouts. To the upside, 32.80, last Friday's low may come in. If we do break above 32.80, then 33.04 opens up to be tested. Be safe out there today, guys.